Alright everyone, Cowboy Trades here, welcome back to the channel for another update. So this has been a long requested video for quite some time. A lot of people have asked me what are my thoughts on the graph. So I thought in this one video we talk about all of my thoughts. I'm going to let you know what I think's happening in the higher time frames, what are my thoughts on the technical analysis in the immediate short term, and then also we're going to wrap up the video talking about my realistic graph prediction for 2025 and why I'm personally bullish on this AI project and why I will be looking to pick it up in the next cycle. So first of all, let's just dive into the higher time frames and take it from there. Before we look at what is going on in the graph right now, first of all, I want to let you know in the immediate short term, I do believe a correction is currently due for Bitcoin. If you do want my full thoughts on Bitcoin, be sure to check out my past two Bitcoin videos, which I have uploaded in the past 48 hours. I won't dive into it too much in this video. Basically, we've hit a bullish price target up at the falling wedge at 31,000. I do believe this is going to be an SFP swing failure pattern. I'm seeing the oscillators top out. I'm seeing some divergences. And to keep things nice and short, I do think we're going to be coming back down to the 200-week moving average around about 27,000. So in general, I think a correction is due for the cryptocurrency markets. Let's now discuss how this is going to affect the graph. Now, first of all, if we are looking at the weekly time frame for the graph, you can see that we are in a very clear downtrend. If I do remove everything that is currently plaguing the screen over on the graph chart, you can see very nice and simply, depending on how you draw it, we are still very clearly in a bear market for the graph. Now, while I'm not the biggest fan of retail trend lines and saying, hey, if we break above this, we're in a bull market. If we break beneath this, we're in a bear market. This is just one thing to keep your eyes on. There are multiple other things that I will be talking about in this chart. What I do want to add to this is you can see in the past 2 weeks or so, we did have a reversion back up to the mean. If I clear up the chart and we're just looking at the EMA ribbons and the bull market support bands, you can see this has only really happened about once in the graph's trading history. Now, we've had plenty of reversions to the mean. We've obviously been in a bear market. We've come into bull market support bands, EMA ribbons, retested them, moved lower, retested them, moved lower, retested them, moved lower, retested, moved lower. But quite recently, you can see, since we put in the current bear market lows down at around about 5 cent and had a nice rally all the way up to 23 cent, you can actually see that we had a break above the bull market support bands. We moved all the way up to the long-term moving average on the EMA ribbons where we got rejected. And since then, it's looking like we've made a M pattern formation and flipped the bull market support bands and the short-term moving average on the weekly EMA ribbons as resistance. If we're looking at the weekly candle body, which just got closed a couple of days ago, you can see we actually pushed almost back up to the bull market support bands and the short-term moving average of the EMA ribbons, and it's looking like we're solidifying a rejection in the higher time frames before moving back down to the downside. Now, I said this has only happened once before, but of course, as you can see, we've got lots of reversions to the mean. So what am I referring to? Well, what I'm referring to is the fact that since we topped out at the bull market all the way up at $3, we have only broken underneath the bull market support bands and flipped above it once back in this region over here. And what you can see is we flipped above the bull market support bands once we came back beneath them and retested it as resistance, because in this instance we really just built out a big M pattern formation before breaking down. We didn't really retest this as resistance. You can see we broke down and retested it as resistance over here for the first time in the bull market after breaking above it. That was a failed move, and as you can see, this ended up being a fast move in the opposite direction. We then proceeded to have retests, and this was just resistance, resistance, resistance since then. However, as you can see, we've done this once again. We've broken above them. We've made that same kind of M pattern formation. However, this time, as you can see, we pretty quickly broke underneath the resistance of the bull market support bands, and it looks like we've just solidified a double retest of the bull market support bands, which have now been flipped as resistance. So in the macro time frame, I am still thinking we're in a bear market. I still think GRT unfortunately has one more leg to go to the downside. I say unfortunately, if you do believe in this project for the next cycle, if you do want to make the best ROI in the next bull run, then of course you should want to buy this as cheap as possible. I'll be talking a little bit later on in the video about the specific price target that I'm currently eyeing up and which level I want to buy GRT at for the next cycle. But just wrapping up on the weekly time frame chart, I do also want to highlight we are currently in this big cluster of volume right now. Now on the left side of the screen, you can see these are the volume profiles. They tell you how much volume is traded within a specific range. Now I've dissected this into two different segments. When you come into these white boxes, there's lots of volume traded. When you come into these red boxes, you can see there's not that much volume traded. Now why I've highlighted this is you can see we tend to spend decent amounts of time in areas where there's lots of volume traded, and when we come into areas where there's not much liquidity, for example, if we clear up this chart, you can see exactly why there wasn't much liquidity in this range and why we really just had a knee-jerk reaction down. Is because when GRT was listed all the way down at 3 cent over on Binance, it had an explosive rally up to about 80 cent in 1 week. It never really built up any support and resistance throughout these regions, and that's why, you know, once we've come down to these regions, you can see very, very quick knee-jerk reactions to the downside. Now, we have been accumulating to the side for the past 420 days approximately, and if we do look at the time that we did have an SFP, a swing failure pattern, this lasted about 112 days underneath this range, where we kind of quickly in 1 week knee-jerk down to new bear market lows, consolidated, made a W pattern, and broke back up into the volume profile. So really for the past year or so, 75% of the time we've been trading between around about 19 cent down to as low as 9 cent. And while we've spent a decent amount of time trading here, I do believe we're getting ready to break back down to the downside. Now, before we talk about why, if we do continue breaking to the downside and we do lose this most recent local low that happened commencing the 5th of June, you can basically see that we will be falling into an area where once again there's not much volume in the markets, and you can see the last time we broke from this white box all the way down to the next level of support, we had a 42% drop in 3 weeks, and in 1 week we had a 47.8% drop. So really what I'm letting you know is if we do see a break beneath 9 cent, it's a little bit far away. I'm not saying this is going to happen today, this week, or next week. This is really something to keep your eyes on in the next month or so for the graph token. If we do break beneath specifically 8.89%, then yeah, we could definitely see a big move down to the next cluster, all the way down at the bottom of these volume profiles at 5 cent. Now we've talked about the daily time frame and talked about how we reverted back to the mean and had a lot of these retests that are playing out in the higher time frames. I want to show you briefly what's happening on the daily time frame. We do have this ascending level of support which was tapped on right here. You can see we back tested this level right here, back tested this level right here, back tested, and it looks like we're flipping this region of support right now. You can basically see this line was resistance, we broke down, we flipped it as support, we made something very reminiscent of a giant M pattern. The only reason I'm not giving you the price target of this M pattern is because we did have a rather decent move back up to the upside over here. So it's a little bit ambiguous whether this is a picture perfect M pattern. In my opinion, the M pattern is definitely still valid, although you know, it's not 100% picture perfect, so I will be looking at different technical analysis patterns. But what I really want to highlight anyway is this was an ascending line, which was resistance, flip to support, flip to support, support, support. We lost it, and literally right now we are retesting this line. Now, this doesn't mean at this moment in time we can't push up a tiny bit further. It is possible for the graph to head up to as high as around about 11.6 cent before having that next breakdown to the downside. That means even if the graph rallies about 5% after I post this video, it's not the end of the world, and we are still underneath this monumental level of resistance. Now you can also see right now on the daily time frame we are retesting the daily EMA ribbons, and we are making lower lows and lower highs, which we will talk about in just 1 second. I do also want to highlight we did have a major breakdown from the most recent wick. You can see we have bounced up, almost tapped the 0.5 Fibonacci, reverted into the daily EMA ribbons, reverted into resistance, and it's looking to me like we're about to set up for this bear flag breakdown, the price target of which being all the way down at 6.1 cent, very close to its bear market lows. Now, if we come over to our next chart, you can very clearly see the trend for the graph has changed on the daily time frame. When we put in the bear market lows, we then proceeded to put in highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Then we made higher lows. Ever since then, we did not make higher highs. We didn't make higher highs here. We didn't make higher highs here, and we finally broke back down and we made lower lows, and since then we've been making lower highs. Now on this trend line, you can just see in terms of the highs, we are clearly making lower lows and lower highs in this market structure right now. And if we are looking at the stochastic RSI, you can actually see the stochastic RSI quite recently came all the way up to 100 and is now topping out. If we just very quickly identify some of the previous peaks which have happened on the stochastic RSI since we did top out all the way back over here. You can see more or less the stochastic RSI pretty much identifies lower highs, and if it doesn't always play out as lower highs, so for example you can see some data points like these two over here emit the lower high structure, even if it's not a lower high in which this data point actually is a lower high, you know, these still do have some rather significant corrections before you're ready to bounce back up to the upside. So in the immediate short term, I do lean bearish. In the higher time frames, being, you know, the weekly time frame and the daily time frame, I do think we are getting ready for a significant correction over on GRT. Before we talk about my price target for 2025 and why I'm bullish on it, if we come over to the 4-hour time frame, I also want to let you know we have reverted back into the 4-hour EMA ribbons as well. If we are looking at the range that we are currently trading in, you can see that we topped out once, twice, and 3 times at the top of this structure. So this is looking like a triple top. This is also looking like an SFP which developed in the last month. If you don't know what SFPs are, they are swing failure patterns. And basically what this shows us is, for example, if we look at the top of the range with this blue trend line, and we look at the bottom of the range with this blue rectangular trend line, what you can see is we approached the top of the range and we got rejected. We moved back down, very simple. Over here, you can see we actually broke beneath the bottom of the range. And because we broke beneath the bottom of the range and reverted back into the range, as you can see, we had a very quick failed move equals a fast move in the opposite direction. That's a swing failure pattern. We failed to have a breakout right here from the previous high. This was another SFP. We had a failed move equals a fast move in the opposite direction. Over here, we once again failed to take out this high and failed to have a bullish impulse above this high. This was a swing failure pattern. Failed move equals a fast move in the opposite direction. So considering we've got these SFPs developing, considering how we're triple topping at this moment in time on the 4-hour time frame and the 1-hour time frame, because we're actually looking at this on the 1-hour time frame, I do think we are coming down in the immediate short term to this level of support at 10.5 cent. I then believe we're going to come down to about 10.4 cent. And if you're looking at this white trend line right now and wondering what this is actually the base of the bull flag that we just looked at on the daily time frame. So if we do proceed to break beneath this trend line following this triple top structure, we could definitely get lots more continuation to the price target, which I mentioned all the way down here at 6.1 cent. So in the immediate short term, I do think the graph is setting up for a breakdown. My price targets are starting off around about 6 cent. And then of course, if we do break beneath 6 cent, we'll be losing this volume profile support. And I think we'll be heading down to the listing price of GRT over on Binance. This is down at 2.9 cent. This is a rather hefty drop from where we currently are at this moment in time. This would be about a 74% drop from where we currently stand. Although this is only about a 44% drop from the previous bear market lows. Do bear in mind, altcoins are extremely weak against Bitcoin right now. So Bitcoin doesn't even need to break down that much further for altcoins to get decimated. If we're looking at how the graph is performing against Bitcoin, you can see that it's only about 10% away from making new bear market lows. The total altcoin market is getting stuck underneath the 200-week moving average, bull market support bands, and EMA ribbons. And you only need to come over and look at the Bitcoin dominance to see that Bitcoin is heavily outperforming altcoins right now, and altcoins are looking like they want to take the next leg to the downside. However, while I'm short-term bearish on the graph, and while I do think that it is setting up for one nasty bear market leg to the downside, I will actually be looking to pick up some graph round about 2.9 cent. So of course, if I'm short-term bearish but I'm buying down at 2.9 cent, I obviously believe that this has potential coming into the next bull run, and I want to talk about that potential now. We've talked about why I think the graph is coming down to 2.9 cent, but now I want to talk about where I see it going into the next cycle. What ROI do I think it could potentially yield? What price target could it come up to in the next cycle? Before I give you the price targets on a silver platter, I want to give you a little bit of backstory. I want to talk about the graph and why I'm bullish on it on the next cycle from a fundamental perspective, from a tokenomic perspective, and also a pumpamental perspective. Now, starting off with the fundamentals, if you didn't know, the graph is the #1 AI project in terms of its market capitalization. It is the 41st largest cryptocurrency, and it utilizes AI technology and open AIs to organize and serve blockchain data to applications. Using these subgraphs, it provides speedy access to cheap index data. This is extremely useful for decentralized applications, blockchains, but it also can be branched out outside of the cryptocurrency ecosystem. For example, let's say something like social media marketing, which is heavily dependent on data. the graph could in theory help lower the costs of a lot of these different enterprises and business ideas. In theory, this should help cut costs by between 60 to 98% per month, cutting down the cost of these expensive infrastructures. And it also allows applications, specifically dApps, decentralized applications built on blockchain technology. It helps these decentralized applications. And like I also said, blockchain technology, decentralized application, there's a lot of things that this can help with, but it helps run these applications without the need of running your own data server, which can allow companies to grow faster because they don't need to worry about the data side of things. And it can also help cut down the cost of running this expensive infrastructure. Also, the graph is extremely secure, very much like Bitcoin, which has round about a 99.99% uptime. If you didn't know, Bitcoin has actually had some times where it has had downtime, very few times. If you didn't know that, this is very similar to the graph. The graph has about 99.999% uptime. So from an institutional perspective, this is definitely a secure AI technology which can be very beneficial to lots of different blockchain technologies, which is why when we come over to the Graph's partnerships, they've got over 30,000 projects built on top of the Graph network, and they provide support for tons of different blockchains, layer 1s such as Ethereum, and also lots of layer 2s such as Polygon Matic, Avalanche, Arbitrum, Optimism, the BSC, Binance Smart Chain, Phantom, Harmony, Near, etc. The list can go on. I will leave the link to the website down below so you can scroll through, look at the white paper, read more about what the graph is. But I just wanted to provide a compendious overview of all of the main things that you need to keep your eyes on. Really, this is cutting edge AI technology built on top of the Ethereum blockchain. It is a token. Once again, it's the #1 AI crypto on the entire market. So from a fundamental perspective, I do believe it's poised for greatness and it does have good fundamentals. So there we go. I'm a fan of the fundamentals, but what do I think about the tokenomics? Well, I actually have some critiques about the tokenomics, which I do want to run through with you. Now, before we get into those critiques, I want to let you know I am not a big fan of cryptocurrencies which do not have a hard cap, also known as a max supply. So when we come over to the graph, this is one of my major critiques of it. There is no max supply. Now, in terms of the circulating supply ratio into the total supply, it's about 90%. So it's not like in the immediate short term, the graph is just going to be hit by unholy inflation. Bear in mind, the inflation rate due to the rewards is currently about 3% per year. But nonetheless, the fact that there is no max supply is worrying. And because of the governance system which is operated on the graph, it takes about a 51% voting power of governance to change things like the current circulating supply, the total supply, max supply, and also the inflation rate. So let's say hypothetically, a 51% attack comes to the graph. The inflation rate could be adjusted to, 10%, 100%, etc. You get my gist. This is why it's somewhat worrying. And if we come over to the tokenomics, you'll see why I have a further critique of this. As we previously stated, the graph does not have its own native blockchain, so it doesn't have a coin. It is a token built on top of the Ethereum networks. And we can look at how the tokens are held by different entities. There's currently 132,000 holders. That is okay. Considering its market cap, it should probably be a little bit higher though. But if we're looking at the top 5 holders, this is 5 individual entities. They actually hold 52% of the total supply. Now, do bear in mind, 2 of these wallets are actually associated with token locks, which respectively hold about 15% of the supply. These are actually held for multiple years, so you don't need to worry about this supply becoming active. If we take away these 2 token lock wallets, then we're basically looking at the top 3 wallets, which hold about 37% of the entire supply. Now, that is definitely worrisome. You may also want to note that this one wallet, the Graph Proxy 2, holds 30% of the entire graph supply. And this wallet here is actually a graph developer. So this is a lot of the supply to be held with one entity. And like I stated before, due to the governance mechanisms which are operating in the graph, it takes about 51% of voting power in the governance to change things like the total supply and also the inflation rate. And considering how, if we come over to something like, let's come over to the top 25 wallets, 63% of the total supply is held by 25 different people. Now, once again, we're looking at 2 of these wallets which are associated with token locks. So really what we're looking at is 23 wallets holding about 50% of the entire supply. So unlike Bitcoin, a 51% attack for the graph is definitely a possibility. While it's unlikely, it is something that you potentially have to keep in mind. So in my opinion, the graph has good fundamentals. It doesn't have good tokenomics. Let's now talk about the Pumpamentals. Now, if you don't know what Pumpamentals are, we're basically excluding things like tokenomics, we're excluding things like fundamentals. For example, there's cryptocurrencies out there like Pepe, Bob, Dogecoin, Shiba Inu. If you have 2 brain cells to rub together, we can all agree that none of these meme coins have any fundamentals whatsoever. Why do they rally then? Well, they rally based on Pumpamentals. They have strong communities behind them. Things like communities and hype can definitely allow cryptocurrencies to pump. So let's talk about the Pumpamentals for the graph. Now, very quickly, before we talk about the graph specifically, I actually want to look at the chart for Nvidia, the stock market chart. Now, you might be wondering, why are we looking at Nvidia? I'll keep it plain and simple. In Nvidia's last 2 earnings reports, it mentioned AI 75 times. This was in February. They mentioned AI. You can see prior to this, the stock market and AI stocks in general were very clearly making lower lows, lower highs, lower lows, lower highs. This was up until January. Something fundamentally changed coming into February. What was it? Well, if we come over to this article, you can see Nvidia mentioned the word AI 75 times, and then it had a huge rally to the upside. Then we came into May. It started stalling for a bit. What happened in May? We had another earnings report, and they mentioned AI about 60 times during that earnings report, and then we rallied up to new all-time highs. The purpose of this is really just to show you that AI is a massive craze right now. It's in the stock market. I believe that it will come into the cryptocurrency market in the next cycle. I don't think this AI hype is going to go anywhere. So I just want to show you right now, AI is something that is happening outside of cryptocurrency as well. It is rallying a lot of the tech stocks. And I think, of course, like I said earlier, I think cryptocurrencies right now are extremely weak, including the altcoin market, which is even weaker than Bitcoin right now. The altcoin market definitely looks absolutely abysmal. So this is why I don't think we're picking up much traction in AI cryptos at this moment in time. But nonetheless, coming into the next cycle, I think AI will play a massive part. And I think AI cryptos are definitely set for a major rally. And because, like we previously stated, the graph is the #1 AI crypto, I think it's poised to be in a good position from a Pumpamental perspective. Now, where do I think the graph is moving to in the next cycle? Well, if we come over to the market cap, it previously topped out around about 5.5 billion in the previous cycle. And let's say hypothetically, 4 years after its previous peak in 2021, coming into late 2025. That is 4 years. Of course, if we've got 3% inflation a year, then after you compound that, we're going to have just over 12% inflation, meaning that for the graph to reach its previous US dollar all-time high, the market cap would basically need to just exceed 6 billion. To put that into perspective, that would mean the graph would move to the current market cap of Polygon or Polkadot, which I definitely think is a possibility. And that is when we could obviously approach the previous US dollar all-time high all the way back up at $3. Like I said earlier on in the video, I would like to be a buyer of the graph down at 2.8 cent. Let's say we rally all the way back up to the all-time high, because I want to be conservative on this analysis. If we approach the all-time high, that is a 100x. Now let's also imagine that the graph never returns to its all-time high, because it's a possibility. Even if we just pump back up to the psychological level of $1, that could be a 34x if you do manage to buy at this level down here, which I am currently looking at. So I personally think the rate of return into the next bull run for the graph could be anywhere between 34 up to 100x. Now, could we make new all-time highs? Could we break above $3? This really depends on if the AI craze is going to dramatically increase into the next cycle. I can't really tell you that in this video, unfortunately. We're going to need to see what happens in the next cycle. Is the AI craze still coming? Is AI still the talk of the town? If it is, then we can make an updated video coming into the next bull run and talk about exceeding the $3 price target. But first of all, let's get in a bull market and talk about that in a later video. So for today, my friends, that is all I've got. I do believe the graph is a great project from a fundamental perspective and a pumpamental perspective. I'm not the biggest fan of its tokenomics, but despite that, I still think that if you do buy at these lows, you could potentially see a 34 up to 100x for the graph. This is why I've currently got my eyes on it. This is why I will be buying some of it coming into the next bull run. For today, that's all I've got. If you do enjoy the content, make sure to let me know down below by leaving a like and a comment. Share the videos with your friends. If you want to further support the channel, feel free to click the join button on YouTube and become a member today. Follow me over on Twitter at 618_cowboy. It's been your boy Cowboy Trades. I'm out. Peace.